Hello and welcome to Make Sense Monday. Today we talk about something more in the weeds than we usually do, medical loss ratio, or MLR as we call it. Now, this was a key component in the Affordable Care Act, really meant to control the profits of insurance companies. And what the MLR says is that insurance companies must spend a certain amount on medical claims from every dollar they collect. So they divide it into two groups. For small group and individual businesses, so small group less than 100 employees, insurance companies must spend 80 cents or 80% of every dollar they receive in premiums on pure claims. And for companies, insurance companies insuring large groups, so 100 or more employees, they must spend 85% on medical claims. So this is doctor visits, hospital stays, emergency rooms, all that kind of stuff. Actual medical care and quality improvement. Sounds great, right? Well, here's the twist. If an insurance company is allowed to keep 15%, that's 15% is a percentage, not a fixed dollar amount. So if they were to bring in $1 billion in premiums in a year, they get to keep 150 million. Now, it wasn't very long before they figured out, you know what's better than a billion? 2 billion, because now that's $300 million they're keeping. Same percentage, bigger dollars. Now, we're not saying that insurance companies are just spending all their time trying to line their pockets and plotting larger increases. But what I am saying is when your margin is tied to your total spend, the system naturally rewards a higher spend. This is what you've been seeing out there in the world. Maybe you've heard, maybe you haven't. Insurance companies buying up physician groups, surgery centers, pharmacy benefit managers. They are vertically integrating, meaning they own more pieces of the healthcare dollar. It used to be when rates came out, it was because an insurance company sat on the other side from a hospital and they argued until they got to the lowest rate increase possible so that the rates that we all paid were as low as they could be while still allowing hospitals to do all their things. Now those two are sitting on the same side of the table and we are seeing record premiums year after year. So this is a major part of it. To me, the fatal flaw of Obamacare, frankly, it was meant to protect consumers, but like most healthcare policy, it created incentives that were perverse and are leading to higher dollar costs. We'll do a much deeper dive into this later in the year. Thanks for stopping by. See you next week.